Following our panel discussion on financing the transition, it now gives me great pleasure to invite our next inspirational speakers to join me on the stage to deliver their pitch on putting climate and nature on the balance sheet. By way of introduction, I would like to welcome Tobias Bandel, who is co-founder of the Land Banking Group, and Muijsson, who is Director for Multi-Asset Strategies and Solutions at BlackRock. So Tobias and Cherry, please take it away. The floor is yours for your inspirational speech. Take it away.
Thank you very much for the kind introduction. Thanks for having me. Good afternoon. It's a great pleasure. It's very exciting to be here on stage with Sherry from BlackRock. But how did that happen? I mean, I'm an agronomist with a farming background. She is a chief investment officer with BlackRock. How did we end up on the same stage? I guess what brought us here is that a previously reliable service provider doesn't deliver anymore, as usual. And I'm talking about nature and the ecosystem services it provides. The agriculture business case was built on the reliable and free of charge provision of fertile soil, clean water, predictable weather patterns. But that business case came to an end as we experienced around the globe. BlackRock resumes in a recently published report, co-authored by Sherry, that for long markets have undervalued nature but start now pricing physical natural capital risks as real assets are at stake due to nature's new behavior. So is this a Minsky moment of agriculture, of nature? Are we facing a sudden revaluation of markets as natural capital risk-related liabilities are underpriced and assets are overpriced? Taking care of nature, I guess, isn't anymore a philanthropic exercise funded by donations or sustainability budgets. Taking care of nature is the investment into a physical infrastructure that is critical to business continuity and therefore creates corporate value. For this reason, investments into natural capital should be considered assets. Now, what defines an asset? It's three things. First, it should generate economic value. Second, it has to be identifiable, which means it has to be capable of being impaired at any time. And third, it must be controllable, meaning you must be able to hold and exchange it. When we founded the Land Banking Group about 3 years ago, we were looking for scalable solutions to account for investments into nature as assets at scale, but we couldn't find any solution. Together with chartered accountants, Together with chartered accountants, we developed Landler, a natural capital management platform that measures, manages, and monetizes investments into nature in such a way that they can be accounted for as assets according to IFRS. Let me give you an example how one of our clients, a larger retailer, uses this Landler, this approach, this 3M approach: measure, manage, and monetize. They start first measuring the natural capital development of biodiversity, carbon, soil, and water on selected supply chains. To do so, they simply have to upload the supplier's polygons on Landler's natural capital account, which then is continuously fed by outcome-based, field-specific measurements using innovative remote sensing and AI technologies. This secures the IFRS requirement of identifiability, as an outcome-based measurement is linked to every plot of land at any point in time. As a second step, they start investing into supply chain resilience in return for securitized attribution right to use the measurement results. Through Landler's portfolio management, these investment contracts are controllable according to IFRS and can be managed, second M, at scale. The third M is about monetization, these acquired contracts, which the retailer can do in various ways. A, get better lending conditions as natural capital risk is demonstrably reduced. B, gain competitive advantage in the market as investing into more regenerative or sustainable supply chains isn't a profit and loss position anymore. And C, strengthen the balance sheet by holding tradable green assets. From a financial market perspective, this retailer is the more interesting enterprise as it discloses critical natural capital exposure data. Landler's measure, manage, monetize approach provides an end-to-end natural capital management platform that allows to invest into nature in such a way that these investments can be considered assets, as they are identifiable, they are controllable, and they generate future economic value. For land stewards, for off-takers, for investors, investing into nature doesn't compete anymore with core business through this approach. It actually enriches the business case. Sherry, is nature the next new hot asset class? And if you state in the previously mentioned report that an expanding data landscape is key to the emerging new natural capital investment opportunities, would tools such as Landler qualify as a facilitator to actually make investing into land use change one of the most promising investments these days, an investment opportunity institutional investors shouldn't miss?
Yeah, thank you so much, Tobias. And it's a pleasure to speak here in front of this audience today. And as investors, we have definitely also been looking at nature, both from a risk perspective, but also from that opportunity perspective, as you outline, Tobias. So let me first start that nature is very much real in terms of the dependencies and the risks for the whole real economy. So what we're interested in is that many businesses have ultimately some dependency on nature. And that really matters because it means that that risk is also potentially financial risk that we need to understand also when we manage money on behalf of our clients. So that's the first part. The other thing that we're also very interested in here is how we can start looking at this from a scenario perspective. So we know that many of the tipping points around nature and the quality of natural capital, that some of those events might actually be shorter than some of those and nearer to us than what might happen with climate. And this is really important because we need to understand those risks. We already see that there are cases where there's ecosystem failure and that businesses are affected by that financially. That is investment risk that we're also looking at. Our research shows that water scarcity and water efficiency is already being priced by markets. We can see this in publicly available data from companies that are listed, that companies that are more efficient with their resource use, that they're doing better. And that is just the tip of the iceberg, because we know that there is so much more data and information out there that's interesting to us. So how do we act on that as investors? So what we need to know is what is, like, first of all, the risk and how we can quantify that, but also what is then the opportunity on how we can invest in it. And that investment opportunity set is quite large. Some estimates show that when we look at nature-positive business models, the market for that is around $10 trillion. And about half of that is actually related towards sustainable food and agriculture and land use. So those are some significant numbers that we're seeing from where the potential opportunity set lies. And if you contrast that also with the policy side, we know that from the Global Biodiversity Framework, there is that number, that 700 billion annually, that's been estimated as a funding gap for nature conservation, restoration, but also to mitigate biodiversity loss. That money, that has to be funded mostly from governments and from philanthropic capital, but there's certainly a role for the private sector to play a part in that too. And that is where it really matters, because this is the opportunity that we have to define what those nature markets should look like to ensure that we don't do any unintentional harm. And that is very important also from how we are looking at this from an investment case perspective. So in our report, we highlight 4 specific areas where we are looking out for from an investment perspective. The first one is around companies that are more efficient with their resources. That's the point that I had earlier around water use. But the second one is also around precision agriculture, but also companies that are better with managing resilience in their supply chains. The second one is also around circular business models. Businesses that are able to reuse and recycle waste and make that into a business model. Then there's third around nature restoration and also things like reforestation that could be a direct investment opportunity. And last but not least, there's also around how we can harness nature for different purposes. Think about synthetic biology and all the interesting things that are coming from there that might also mitigate the pressure that we have on nature. So all taking that together, this is not an easy thing to solve for. We know that there are challenges, and in the previous panel there were already references, I think also by the European Investment Bank, around scalability of opportunities, but also that there's still de-risking capital required for some of those opportunities. And last but not least, there's also very much a topic around data quality, which is very important, not the least from how we can measure how these opportunities and risks look like, but also that it gives us more on-the-ground information. And that brings me a bit further towards what Lander and what Tobias was talking about. We are very interested in how we can move from not necessarily going into land equity, but also on how we can get direct exposure to those ecosystem services, so those proceeds from making systems more resilient. And if businesses can go for those kind of practices and make their supply chains more resilient, that they have the proof points that they can show that they have indeed all the way to the soil microbiome have made these improvements, that is actually very interesting also from how you can de-risk investments as well.
Thank you, Sherry. Very interesting and actually quite encouraging. I mean, again, who would have thought that an asset manager basically would ask for soil health, cover crops, etc., and not from a philanthropic perspective, but for return on investment reasons. And if I may say so, it's not only BlackRock, but there's other financial market players who start considering nature as a new asset class. The tools are there. Let's build a bridge to these new allies. And if you think about it, could these newly available tools, could such a transparency and assetization infrastructure also contribute to an outcome-based benchmarking system as suggested by the strategic dialogues, respectively the vision of agriculture and food? Imagine every land steward would have a natural capital account, making its ecosystem services visible, but even more important, investable. This is innovation Europe can build. The technologies are there. So considering investments into nature as assets, packaging them in securitized contracts makes the transition bankable. Let's put nature on the balance sheet. And yeah, financing the transition towards more sustainable land use is an interesting investment opportunity to secure and enrich the agriculture business case in an operating system that has changed. Thank you.
Thank you very much indeed, Tobias and Sherry. I think you both provided a very interesting tour d'horizon. This is certainly new territory for myself, but I think you explained it in such a way, the idea of de-risking investment and putting natural capital at the forefront. I might just follow up with a quick question. I did some reading ahead of today's event and understand that Goldman Sachs launched a $500 million biodiversity bond fund that was investing in labeled and unlabeled corporate bonds across developed and emerging markets. Might I ask, how would this work in practice for the betterment of nature and biodiversity-driven initiatives?
So I guess it's a two-layered question, at least, complex one. Like on the measurement side, and we actually speak with Goldman Sachs, these plots of lands which would qualify as a conservation, nature protection area, or whatever biodiversity project, would get such a natural capital account. You need the polygon, the digital shapefile, and then basically in biodiversity, not everything can be observed from space, but you could look at things like the structure of the land, how it is used. Are there corridors combining different biodiversity hotspots? Because if you just have individual trees, it's nice for the count, but nothing happens. So if there's habitats created, how is the vegetation development, how diverse it is? And then you can basically track this development over time, which then can be enriched with some ground truth innovations such as camera traps, sound recorders, etc., to also look into the fauna. But this is, we launched a similar approach. You were present in Cali with African parks, where actually already the first millions of transaction took place, where corporates invested into nature restoration. So that's the technical part.
Okay, and Sherry, I might just ask from the BlackRock perspective, how are you getting this message across, and is there buy-in on the ground?
Yeah, absolutely. And I think it's a very exciting move that the biodiversity bond has been launched. And in particular, we've seen that when you look at the debt space more generally, there are some really interesting opportunities now that you can help businesses finance that green transition. And with that green transition, many people think about energy, but in fact, a lot of things around nature, they also link quite closely to climate. And that means that there are those opportunities that we've identified that is also around green energy, but it's also around wastewater solutions and other things that governments are doing, but also that corporate bonds and corporate entities are doing where they need financing. So there's definitely a lot of promise there. And we've definitely seen the interest from other asset owners on that as well.
Thank you very much indeed. Well, ladies and gentlemen, Tobias and Sherry, our inspirational speakers, thank you very much indeed for joining us this afternoon. Please, a warm round of applause.
Thank you.